Bitcoin shorts have a billion-dollar liquidation cluster sitting above $82,218. BTC Short Liquidations puts the focus on the setup can create forced buying, but only if Bitcoin reaches and holds the trigger zone. The confirmed detail is that about $1.01 billion in BTC short positions could be liquidated if price breaks above $82,218. The opening tension is concrete, whether Bitcoin reaches $82,218 with enough volume to trigger forced short covering. That matters for leveraged BTC traders and derivatives venues because they have to read $1.01 billion shorts and $82,218 trigger before the full outcome is visible. The first read should stay tied to those facts, not to broad crypto mood or an unsupported forecast. The baseline starts with this. Liquidation map data shows a dense short cluster just above current price levels. The level is shaped by leveraged positioning rather than only by historical chart resistance. The measurable anchor is $1.01 billion shorts, while $82,218 trigger gives the story its structure. The related signal is liquidation map, which keeps the story tied to a specific mechanism instead of a vague market reaction. These details set the boundary for the rest of the segment. What is confirmed, who is exposed, and which checkpoint must arrive before the next read changes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is short liquidations force exchanges to buy BTC to close losing short positions. In plain English, that forced buying can feed a squeeze when many shorts sit near one price level. That matters because where forced flow could appear depends on the mechanism working as described, not on a headline alone. If a viewer misses this mechanism, the story can look like ordinary volatility or routine announcement traffic. For Bitcoin, it is really a test of short cluster and whether spot buying pushes price into the cluster. If that condition does not appear, the setup stays conditional rather than confirmed. The direct impact lands on leveraged BTC traders and derivatives venues. A fast move through the cluster could overshoot as automatic liquidations execute within seconds. A slow approach gives traders time to close positions or add margin, weakening the cascade. This is where the story becomes practical, because it changes where forced flow could appear rather than only the mood around Bitcoin. The affected side does not need a grand market narrative to feel the consequence. It needs clarity on volume surge. That is why the impact scene stays focused on the user, trader, protocol, regulator, or institution actually named in the facts. The unresolved part is liquidation. Maps are snapshots that can change before price reaches the level. That does not prove that Bitcoin will rally or that the entire cluster will liquidate. The evidence that would clarify the gap is high-volume price action through $82,218 and real-time map confirmation. This boundary is not a formality. It is the difference between the confirmed event and the outcome people may already be trying to price. Without that proof, untriggered leverage remains a live risk, even if the first reaction looks confident. Until that evidence appears, the confirmed event and the expected outcome have to stay separate. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The decision point is whether Bitcoin reaches $82,218 with enough volume to trigger forced short covering. BTC short liquidations should be judged by that trigger, not by the loudest forecast attached to it. If spot buying pushes price into the cluster, the story gains confirmation. If shorts adjust before the break, attention shifts back to untriggered leverage. The useful close is to track $1.01 billion shorts, $82,218 trigger, and volume surge together, because one signal alone can misread a conditional setup. For Bitcoin, the cluster matters only if triggered.